afternoon. What's your sense of how this month will shape up? Will we move against the tide as we have with global cues, or do you think we'll fall in line?
I think this will be a very interesting month for the Indian markets. One is, the prospects of monsoon will become clearer, and also the earnings, results coming for June quarter would indicate whether the expected growth is actually happening, and analysts will then look to see what they want to project for the next quarter, the fiscal year ending 2011 and fiscal year 2012. My personal sense is that I think India's economic growth looks robust. I think actually the Indian economy is in that rare sweet spot where alternative asset classes are looking less attractive than the Indian opportunity. However, all this optimism has to be balanced by the fact that valuations from a near-term perspective have run up. They're looking stretched from a historical perspective. And I think secondly, the global situation is clearly one which warrants a lot of caution, and for whatever it is worth, in the last 5 years, bull runs in India have been led by overseas money. So unless that changes, we will have to be look to these international markets to get cues on what's going to happen here. But as far as the economy is concerned, our sense of our meetings with companies is that earnings growth numbers for this year, for the next year, are looking optimistic. Companies are looking to expand capacity, and I think the mood is far more optimistic, far more cheerful than it was maybe 6 months ago.
The optimism hasn't been backed up by that much buying from the domestic front, at least not last month, Ved. Are you choosing to use this opportunity or this time to buy into the market ahead of earnings?
Let me answer that question in two ways. I think there is some leeway that obviously fund managers have in terms of buying new stocks, selling existing holdings, and so on and so forth. The other part is fresh money coming in. And I'm sure you have the numbers. Fresh money coming into equity funds or into other institutions in the equity asset class has not been much, and which is why I made the point that it seems that we will continue to be dependent on overseas money flows to spark a positive run in the Indian markets, if I may say so. And hence, I think while mutual funds are churning a bit and there's some cash, and I don't think it's huge, quite frankly. I think it's more that there has not been a huge inflow of domestic money into funds, and I think hence the dependence on overseas FIIs.
Have you also been churning your portfolio a bit, Ved? I mean, there's a new list of leaders that's out. There's oil and gas right on top, but there's also spaces like capital goods.
Well, as you know, we as a fund house have had a long-term positive view on the capital goods, construction, mid-cap infra sector, and we were among the pioneers in launching products and managing products in that space. So we continue to be positive on that space. Medium term, we feel that will be the one bright spot for India in the future. Apart from financial intermediation and consumer goods, our sense on oil and marketing is that there was an opportunity. I'm sure various fund houses, including ours, took advantage of that opportunity in terms of positioning funds in that, some portfolios in that space. On a more secular medium-term basis, we think consumer goods, pharmaceuticals, two-wheelers, automobiles particularly, and capital goods, construction, engineering, particularly the mid-cap infra sector and the financial intermediation sector is what will drive markets in the next bull run.
Ved, we were just talking about the kind of action that's come into the mid-cap space. What stories do you like over there? You talked about infrastructure, but any new themes that you all have been backing?
I think, a lot of drivers of the lead sectors, for example, in automobiles, it would be auto ancillaries. In the case of capital goods engineering companies, it would be companies which are supplying to these sectors, or small cap, mid cap construction engineering companies. We feel that there are three changes taking place in this area. One is that quality of corporate governance is improving rapidly. Number two, many of these companies are now at that critical mass where they can actually build management structures, enhance sustainability. And last but not the least, given the very positive prospects for economic growth in India, there would be bottlenecks on the supply side, and that is when these companies are at advantage, because they are required at that time to fulfill capacity requirements. So I think all these three things are processes which are happening now, and hence I think while again it would be individual companies, valuations may run up in some cases management quality may not be so good, so you have to be very, very careful in this sector. But I think on a 40,000 feet view, if you look back on this period 3 years from now, our sense is that the mid caps and the small cap sector would have outperformed significantly.
Ved, what about the monsoons? I mean, that's beginning to become a bigger question mark in the market's mind. How much of a potential problem might that be for us?
Well, I think, I can't claim to be expert in that area. I would say that if we have another failure of the monsoon, if I may use the word, it will certainly be negative news for the markets in general and for agri-dependent stocks in particular. However, it's early days yet. Predictions from the Met seem to indicate that it would be anywhere between 90% to 100% of normal rainfall. We live in Mumbai, where at least it was raining this morning, and it's rained a bit in June. So I think on the whole one should keep an optimistic outlook, but if there is failure of the monsoon, yes, I think there would be concern. I think there would be 4 drivers of the market. There's a monsoon, there's earning expectation in June, there is a global liquidity situation, and there is a situation about local sentiment for equities. I think among all these things, the global equity sentiment and the monsoon are the question marks. The other 2 areas are reasonably positive.
Wait, do you think we're entering another one of those volatile phases as well, where the market makes a lot of noise, albeit within a very tight range?
I would think so. I think this will be a consolidation period. As I said, there are positive forces. The expectation of earnings growth is positive. Companies are expanding capacity. There is positive sentiment in domestic markets as far as equities are concerned. However, the global risk appetite, our monsoons, I think, are question marks. So I think there will be countervailing forces. Valuations are a little stretched, and hence, till such time the picture emerges clearer, we will be in a consolidation and trading band. In my view, 3 things need to happen before we break out of this. I think first is analysts need to be convinced that earnings growth momentum is here to stay, and hence they'll wait for this quarter numbers, most probably September quarter numbers, before taking a call. Number 2, I think people have to start looking at not O11 but O12 numbers in terms of the valuation bit. And last but not the least, I think the entire concern with the monsoons have to play out. So a lot of this will be behind us come September and October, and I think my sense is that I think next 3 months would be more a period of volatility, phase of consolidation, and a period where people really firm up their minds about the direction of the market in the future.
Ved, next week, what would you watch most prominently? Still the global cues?
I think also if any early signs of what earnings numbers are going to be like, a lot of analyst predictions, etc. will start coming out, and maybe some more news on the monsoons. I mean, if there's any positive news, that will be very, very good for the markets. As of course the global cues, I think those are the most keenly watched because of our dependence on overseas money flows to drive our markets. So I think all these factors will be under scrutiny of the markets.